Hi everyone, welcome to my channel. I'm Doris. I'm here to share with you about my stock account. Today's market update is that stock buyback activities continue to cool down. The biggest momentum for the US gains is stalling. Stock buybacks are undoubtedly the biggest driver of the 10-year US stock market, but business spending on this front is slowing rapidly, and rising interest rates and uncertain economic environment. U.S. share buybacks fell another 30% in the third quarter, following the 26% decline in the second quarter. While the decline appears to be improving, the Bank of America said tighter credit conditions and higher cost of capital means buybacks remain at risk. S&P 500 companies repurchased a record of $925 billion in 2022, continuing the trend of accelerating share buybacks after the 2007 global financial crisis, when interest rates fell to near zero and remained relatively low for the next decade. Supporters argue that the buyback is an optimal use of cash by company, while opponents argue that the funds could have been used to build new factories, increase research and development, and improve employment pay. But for investors, it is welcome. Share buybacks support another share price by reducing the number of shares and raising the earnings per share. And the buybacks can boost investor sentiment, which means company executives are optimistic about the outlook for their businesses and confident about their financial situation. Bank of America strategist, led by Savita Subramanian, wrote that buybacks are a phenomenon after the global financial crisis, with companies using cheap financing costs to buy back their shares. Now, with the end of the era of low interest rates, this situation is at risk. The target range for a federal funds rate right now is at 5.25% to 5.5% due to its anti-inflation effort. The S&P 500 repo index has lagged the overall S&P 500 by about 10 percentage points this year. It's the worst performing year since 1998, excluding 2020. Of course, the share repurchase tax, which came into effect this year, could be another disadvantage for corporate executives to consider, with big companies like Apple, Alphabet, Meta, and Microsoft likely being the first to bear the crunch of such taxes. This week's intense earnings report from big tech companies could bring the latest news on buybacks. Microsoft and Alphabet will release their latest quarterly earnings on Tuesday night. Meta platforms will release on Wednesday night, and Amazon will release on Thursday night. In addition to the cash-rich tech companies, others are issuing bonds to seek buybacks, but this approach will not work in an environment with higher interest rates, and investors will not agree. BofA said the weak bond issuance suggests that future buybacks are likely to remain moderate. Wall Street expects buybacks to fall 15% this year, although a modest 4% rebound next year. The decline in this year has coincided with almost zero earnings growth and management fears of a recession amid rising interest rates. Purchases are one of the most volatile uses of cash because companies adjust repurchase activities to the operating environment. Costins and his team expects an improved overall economic environment next year, and the end of the Fed's interest rate hike cycle. The improvements in corporate earnings growth to lead to a small rebound in buyback activity. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.